Good afternoon, everyone. This is Vince Vora from TradingWinds.com. Hope everyone's doing well. Thank you for joining us today. We'll get started in just a moment or two. If you can please, before we get started, just let me know whether or not you can see my screen. You should see a blue slide that says Voracity, and whether or not you can hear me well. If you just type a yes or no in your chat box, I'd really appreciate it. Excellent. Thank you, John, Avery, David. All right, excellent. We've got a number of people here. Thank you very much. Looks like everything is working properly. Excellent. So it looks like it was an interesting day in the markets today. We were down, a decent amount throughout the day, and then we had a late day rally. We still closed lower. The Dow was down 200. The S&P was down almost 24. The Nasdaq down 145, and the Russell was down almost 25 points. Still a substantial down day. It'll be interesting. We can look at some of those index charts as we go through the presentation today. I'd like to be as interactive as possible. Please, if you have any questions along the way, by all means, enter them into your chat box. And we'll try to pack in as much information as possible today. Voracity is a system that I started working on many, many years ago, and I've been trading with it ever since. It's based solely on technical analysis, and what it does is take advantage of trend and momentum, and identify some of the bigger trading opportunities for you. I'll go through all of that in just a moment. Looks like we've got everyone here. I am going to get started. Again, thanks everyone for joining us. This is our presentation on Voracity. Now, please, before I get started, I do need to remind everyone that trading can be risky, so please don't trade with real money until you are completely comfortable with the system you are using. I'm Vince Vora. As I said, I'm the head trader here at TradingWinds. I have been doing this for quite some time, and I am the developer of Voracity. And I'll tell you how that all came about in just a moment. In today's presentation, though, what I'd like to start with are my money management rules. This is a key part of any trading plan. It's one of the most important parts of the trading plan. You should always have a money management plan. I'm going to give you my rules very quickly. And then I'm going to talk about the components that make up Voracity and how it all came together. I'll show you how it works and why it works, but more importantly, how it can work for you. And again, as I mentioned earlier, please, if you have questions, don't hesitate. Ask away. Type them into your chat, please. So let's get started with the money management plan. Rule number one, I always say trade with a positive mindset. But more than anything, what I mean by this is make sure that you have a clear mind. You're not distracted in any way. Shut off all distractions and focus. Through the many years of coaching students, what I've clearly realized is that the bigger mistakes tend to happen when you're a little distracted or maybe not feeling great that day. That is when you tend to make the most mistakes. So, if you're going to trade, make sure you're distraction free and you are feeling well that day. Then what I always tell people is trading is not so much about picking entries and exits. The Voracity system will actually do that for you, but it's more about how you manage an order once you're in it. And if you've got too much money in any one order, you're not going to be able to manage it properly. You're going to get nervous. You're going to get very stressed out, and you won't be able to think clearly and follow your rules. So I always tell people, make sure that whatever amount you're trading with, that it feels completely insignificant to you. Okay? Imagine if I asked you to put $5 in a trade, would you really worry too much about it? But if I asked you to put 50,000, for most of you, that would be a big difference. So, trade as if you only had $5 in the trade. That way you're totally relaxed and can think properly and, stick to your plan and follow your rules. Now, how do we control risk in the market? Well, it all comes down to the size of your orders again. And one of the rules I follow is to never ever put more than 5% of my account balance in any one trade. Now, the goal here is not really to end up with 5. It's a starting point. We really want to reduce this as quickly as we can. So as we grow our account, we want to continue to put more money in each trade, but percentage-wise, we want to reduce it if we can. So you want to start with 5, and as you grow your account, go to 4 to 3 to 2. And if you can, excuse me, if you can get to the point where you are putting just 1% of your account balance in any one trade, then you will automatically achieve rule number 2, which is trading with an amount that feels insignificant to you, even though that dollar amount might be significant. Okay. Now, there are things that we certainly can't control in the markets, and every once in a while there is some type of black swan event, some completely unexpected event that happens, whether it's a news item or some other event that can really move the markets. So for this reason, we always like to keep 50% of our account in reserve, or in other words, in cash, and that way, no matter what happens, if the market gets affected and we take a loss, the loss won't be that big, and we will always have money to put back into the markets and make back those losses. Okay? Last but certainly not least, you definitely want to spread your trades out. Many times we've seen a day like today where it was clearly one-sided, right? So if we go through the charts today, there'll probably be a number of setups that are showing short setups. If we jump in and short 6, 7, 8 stocks, and tomorrow the market rebounds, which we've seen happen many times, we're going to find ourselves in a huge hole right off the bat, and that's what we want to avoid. So you want to select the 1 or 2 highest probability trade setups for whatever time frame you're trading. Okay, if you follow these rules, I can guarantee you'll never take a big loss again. Losses are a part of this business. I like to say they're a cost of doing business. Okay, that you're definitely going to have losses. The key is to keep them to a minimum. If you keep your losses small, over time, you will be successful because the winners will come, especially if you follow your rules. Now, we have 2 other sayings, and the first one's more for those of you who might be just starting out. I like to say you'll never go broke taking profits. What I'd like to see you do is take profits when you have them at the beginning. This accomplishes 2 things. Number 1, it'll help you grow your account a little quicker, but number 2, it'll help you not only gain confidence in the system that you're using, but in yourself as a trader, which will pay off in spades later on. Okay, so when you have those profits, take them. And please understand that you don't control the markets, not today, not tomorrow, not ever. You won't control the markets. You simply can't. So this is not about whether you're right or wrong. That's important. What matters is how you execute your trades and how much control you have over what you're doing. And that will dictate exactly how much money you make when you're right compared to how much money you'll lose when you're wrong. Again, if you control those losses, get out of those trades as quick as possible when it goes against you, and keep your losses to a minimum, you're going to do quite well longer term. Okay. Now let's talk about Voracity. Voracity is a system that is made up of a number of indicators and oscillators. It's a combination of them that when they line up at a certain point or a certain way, it gives us a very high probability of success with that trade setup. Now, this came together for me a number of years ago, and what took so long to put it together was not the basics of the system. The basics and the combination of indicators and oscillators came together quite quickly. What took a very long time was to find a way where it would get you out as soon as the market started going against you, but would actually keep you in the trade if it went well. So in other words, limiting the risk or limiting the losses without capping your upside. That's what took so long. And thankfully, after many years of back testing and forward testing, meaning that trading with real money, it all came together. So what is it designed to do? Well, Voracity, compared to some of the other systems that I've developed, it was really designed to catch the big moves. And it does it quite well. Again, it's based solely on those indicators and oscillators, strictly on technical analysis, but I've used it over many years, over all types of different markets, in flat markets, strong uptrends, strong downtrends. It works well across the board. And it does keep those losses small without capping the upside. So, you know, that it maximizes that safety component in the trade, which I love because I absolutely hate risk. Okay? I absolutely hate risk. When I first started out, I took a big loss, and it really affected me. Not just my life from a financial standpoint, but emotionally and psychologically with my trading. Luckily, you know, it happened very early on in my career. So it was a real strong lesson for me. Thankfully, I didn't quit, and I pushed through it, and it made me the trader that I am today. But I would love to, if I could, help you avoid going through what I went through, because it is not pleasant, trust me. And that's an expensive lesson to learn. So hopefully this will help you avoid that. So what Voracity will do for you is not only help you identify, you know, some shorter term and some swing trading opportunities, but for those of you who may be managing a retirement account of some sort, trying to save for your future, this catches some huge moves to the upside longer term on those weekly and monthly charts, and I'll show you those in just a moment. So the other thing it does is predict the major market moves. Okay, so if you ever want to know whether we're in a bull market or we're switching from a bull to a bear, this will help you do that, and I'll show you that right now. So let's bring up the charts here and talk about Voracity. Now, first of all, before I put the indicator on, I do want to tell you that one easy way to improve your odds as a trader is by selecting the right charts to trade. In other words, you strictly should be focusing on stocks that are trending strongly in one direction or another. And I say stocks, but it could be Forex, it could be futures, whatever you want to trade, whatever you're charting, just make sure you have a clear trend in one direction or another. You know, that the bars are very uniform, they're very similar in size. This is a chart of a biomed, ABMD, and you can see nice steady uptrend. Now recently, we've been moving sideways, and you can see the difference. If you look at the bars here, all throughout they're fairly similar in size, you know, nothing too big. And then out of nowhere, we get all these different size bars, and this is what we would call volatility, and there's no clear trend, right? And so trading in an area like this is very predictable and very easy. Now, Voracity will select the entries and exits for you, but if you start with charts like this, it's difficult to go wrong, as opposed to in here where it's bouncing around. No matter where you enter in here, your chances of getting stopped out are much greater. So from time to time, this will happen on a chart. But if it's a stock similar to Tesla, and how many of you have tried to trade Tesla lately? Right? It's all over the place. Now, this is the indicator on there, and I'll talk about that in a moment. But you can see here that no matter where you get in, okay, your chances of success on a chart like this are very difficult compared to something like ABMD, okay, where it is just much cleaner. Okay, let's put the indicator back on here and show you what it looks like with the indicator. There it is. So let me explain first of all, and I'm gonna, before I go any further and explain the indicator itself, I want to add in one indicator here, which I like to use on all my charts. It's a simple moving average. Okay, it's the 20 period moving average. I use it on all my systems, all my charts, based on the close. Okay, but it's a simple, not an exponential, a simple moving average based on the close. Okay, let's select the color here. I'm going to select this blue and maybe thicken it up a little. There we go. So the reason why I like to have the 20 period moving average on my chart is it helps me read the momentum behind a move. So it's clear by the trend, when it's sloping in one direction or another. But the degree of slope on that 20 really helps me identify or differentiate the high probability setups from the others. Okay, on any given chart, you're going to see a number of setups, entries and exits, which I'll explain in a moment. The key here is not to take them all. We want to take the high percentage plays. Okay, so from a programming standpoint, we couldn't eliminate all of them because what we're trying to do is capture the bigger moves. And in order not to miss some of the bigger moves, we had to leave a specific part of the programming language that sometimes fires off signals that we're not interested in. But before you walk away with the indicator and use it, we will teach you exactly which ones we would select and which ones we wouldn't. But as I go through these examples, I do want you to focus on the areas where there is a slope in that 20-period moving average. So look at the signals that happen when we have a significant slope, and you will notice that the vast majority of them not only work out but work out extremely well. Okay, those are the ones we really want to focus on. So looking at the indicator, I'm going to zoom in here. There's three parts to it. There's these little diamonds, there's the arrows, and there's these little exit flags. So the diamonds signify a setup bar, meaning it's giving you a heads up, right? It's not time to trade just yet, but a trade may be setting up. Okay, not all of them turn into actual triggers. So sometimes you'll see these diamonds that are not followed up by anything else. Okay, which means for whatever reason it did not meet all the conditions and it did not trigger. But if it's followed by an arrow, then it means it's time to get into the trade. And obviously the green colored markings all have to do with long setups, and the red colored markings have to do with short setups. Okay, so the diamonds are, green diamonds are long setups, red diamonds are short setups, and then green arrows ask you to get into the trade, and the little exit flag tells you when to get out. Okay, what you'll notice throughout here is that if it asks you to get in, and then it realizes that, hey, this may not have been the best decision, and it starts going against us, it gets you out right away. Okay, but again, this particular setup in here is not one you would have taken. Okay, mainly because there's no momentum at the time. The moving average was completely flat. There's no momentum behind the trade. We're not interested in that. We are interested in the ones that are trending higher, for sure. Those are the no-brainers. And others, like this one in here, which there's a very specific reason for that we'll get to in the class where we tell you exactly which one to take and which one to not. But what you will notice throughout is that whether you're trading stocks, futures, Forex, it doesn't really matter what time frame either, whether it's a 1 minute, a 5 minute chart, daily, weekly, monthly. It does a very good job of getting you in for those bigger moves and capturing those bigger moves. And no matter what time frame or which signal you take, it always does a very good job of getting you out very quickly if it doesn't work out, so that your losses tend to be much smaller than your winners. And if you focus on the ones with momentum, you're going to have many more winners than losers. Okay, with that kind of math, everything works out. So feel free to type in a symbol or two if you want me to have a look. I'm going to go through many. No particular order, no particular reason why I'm choosing some. I'm going to show you some stocks, some futures contracts, some Forex pairs. Okay, and we'll go from there. I'll look at some of the more popular ones, like Amazon, for example. Okay, a nice trending stock, right? This is the daily time frame. Again, it can be any time frame you want, and you can see that it gets you in nice big winners. If you have that slope, look at how many were winners and how many were losers. It's difficult to find a loser if you're dealing with the trend on your side. Okay, have a look at the weekly. Some nice big moves. It will from time to time miss one. Doesn't happen very often, but it does. but there'll be plenty of setups along the way. So again, you want to focus on the ones that give you the best opportunity to succeed. So one of the things we'll teach you in the class before you walk away with the indicator is that how do you compare one to the other, right? So if I selected two stocks that look similar, that both had a nice trend with nice momentum behind it and a setup, what else can I use to differentiate from one to the other? And you can use other indicators, or you can use technical analysis basics. I'll tell you how I do it. Okay, keep it very simple, very clean. But you can see how well it captures it. The most recent trade here, which got us in April, is still along here on Amazon, and it's been quite a move. Have a look at the monthly chart. The one thing I love about this is that when you capture, or when you find stocks that are just going sideways, and it could be one that was beaten up for a while, right? Like out of the 2008 crash, for example, many stocks that were $100 or so came down to single digits, right? It completely collapsed, and then they consolidated for years and years and years doing nothing, and then suddenly we started to move higher again. And when you start to see that slope, you start to see that it's trending and there's momentum. And then that's when you want to jump in on these signals. And you can see just how powerful this is. So, had you picked up Amazon here in a retirement account at $400 a share, and it was a stock that maybe was paying dividends as well, and you just sat on it, have a look at that move. Now, they don't all make these kind of moves, but you're going to see that chart after chart after chart, how well Voracity selects these or helps you stay in the trade. The other thing that is really nice, and this is where I got to give Jeff Gibby and the other folks at Metastock credit, is when they put this indicator together, they did a few things that just make it very, very simple and easy to follow and to manage your orders. For example, I'm sure you've noticed that when there isn't a trade on, the bars are black and white. But if you're in a trade, if it's a long trade, all the bars are painted green. And if you're in a short trade, all the bars are painted red. That's for a very specific reason, to help keep you disciplined and not get you scared out of that trade. Many, many times when you get in to a trade like that, if you just have regular bars or candlesticks and you see a bit of a pullback like this, you'll see a bunch of green candles and then suddenly some bigger red candles, and you start to doubt whether or not, is it turned around? Am I giving up my profits? What should I do? You end up jumping out of the trade only to watch it take off again. Well, this was purposely done so that you just see it green and you just sit in there until you see that little exit flag, okay? And it'll tell you when to get out. And you can see just how big of a move. But you can pick any stock. Let's look at a Dow component like Nike, for example, right? This is the daily chart, but let's go back to that monthly, right? And there are those bigger moves, okay? It just does a real nice job of capturing those moves. So, if you don't have a lot of time to manage your portfolio, or even if you have two separate ones, right? One that you trade on a shorter term basis and another one for retirement, just pick some nice dividend paying stocks and have it sit there throughout these moves. It'll really help you select some big winners. Let's look at a few others. Jared was asking for Vail. Let's look at Vail here and see if it gave us some nice symbols. You're going to find that not every stock, depending on how well it trends and so on, does very well. But let's have a look. This is the daily time frame. Let me zoom out here. So, again, you can see it selected some trades here on the daily. Now you see how many times it's getting you in and out, okay? You don't want to go in and out that many times. So again, the idea is not to take every one, okay? But focusing on the ones with slope, you can see that it does a pretty good job of picking up some winners. Okay, have a look at the weekly. Bigger drops. There it is. There's those wins. Okay, does a decent job on a monthly. Okay, there it is. Bigger moves. Okay, and it just called a long recently here, just last month on this one. Okay, so it doesn't matter what it is that you're trading. Let's have a look at a different one. How about Pfizer? Let's have a look. There's the daily. So again, nice, strong, trending stock. Any time frame. Let's look at the weekly. There it is. You know, and I often get asked, you know, why is it getting you out here? You know, if it got you in here, why doesn't it just keep you in for the rest of the time? Why is it getting me out and back in and then out and back in and so on? Well, the reason being is we want to get out of there as soon as there's a hint that it's going to go against us, right? We don't want to give up our profits. We don't want to turn a big winner into a big loser. The main thing that we're concerned about here is risk, okay? So we want to control risk as much as possible. The winners will come. You know, we can't control that either, but when the markets are trending strongly, it's very, very easy to sit in a stock and make money. But if it goes against you, it can really, really affect you from a psychological standpoint as well. If you sit in there and you watch this turn from a winner into a loser, you know, it's really going to weigh on your confidence as well as a trader. And eventually in the long run, you're going to have a much more difficult time pulling off trades. So I'd rather get out and back in, because commissions these days are you know, insignificant, really. They've come down so much. And that getting out and back in, who cares? And you know, these are weeks, right? It's not like you're doing it minute by minute. Look at the monthly on Pfizer. Some beautiful moves here, right? Pulled back a little and it got us out. And then it realized, nope, this thing is just bouncing off the 20 and turning around, and it got us back in. A real nice move there. And Rob is saying, what do black markers indicate? Do nothing? Yes, exactly. So when the candles are black and white, it means no trade at all. That's a consolidating market, and there is no signal at the time. Okay. Let's look at how many of you trade during shorter time frames, like a 1 minute or a 5 minute. This is a chart of the SPYs, the S&P 500. Okay. Now, what you'll find on the indexes is they do very well on a weekly time frame, okay? But many people like to trade them on a 1 minute or a 5 minute. Let's go down and see if there were signals today on the 5 minute. There they are, some beautiful ones. Now, again, these ones up here, you know, when you see the moving average flat, these in here, we wouldn't have taken any of those, okay? Now, if we did, you can see that it would either be a break even, a small gain, or a small loss, right? It gets you out right away. But we don't want to be chopped around. And all we need is that 20-period moving average to help us decide whether or not we want in or out. So we only want the entries where we have the slope in the direction of the trade, okay? And you can see that if you just stick to that one rule alone, you will do very well with this. But again, we'll tell you exactly when you want to take these and when you don't. So that's a 5 minute. If we go to the 1 minute chart, again, there you go. Stick to the ones with slope, okay? It works out very, very well. Let's look at the Qs. Many people trade the Qs, which is the ETF for the NASDAQ 100, okay? Let's bring in the data here. This is the daily, okay? Selecting some nice trades on the daily, but let's go to those shorter time frames. There's the 5 minute. Couple of real nice trades today. And you know, you can use basic technical analysis as well, right? If you look at this area here, we were channeling, right? We were just kind of going sideways in a range. Well, if you mark the low, right? If you mark the low of this range here, look what happened. and you get a signal right there, I mean, it's a no-brainer trade. You have slope in your favor, right? Look at the 20-period moving average. This is a classic. This is an easy trade. And once you get in, the bars are colored red, and you just stay in there nice and relaxed until you see that little exit. And you can see you don't give up much of the profit, right? As soon as it starts turning, it'll get you out immediately. And that's why you want to focus on the ones with the most slope. So the more significant that slope is, the better, right? Because you can have slope that's gradual, right? You can have more slope and more slope. So I always like to look at a minimum of about 45-degree angle, just eyeballing. But the more vertical it is, the better. And it goes, for long trades, the same thing. You want a very sharp slope. Okay, but when I was going over the slides, I told you could also use this to predict major market moves. If we switch to a monthly chart, right? So it will help you predict major market moves. Now on the Qs here, for whatever reason, it didn't trigger and it missed these. But more often than not, it'll catch these. So whether it's the diamonds or the Qs or the SPYs, or any particular stock, if you see that on the monthly, right, it's calling for a long trade and it's an index, for example, like this is the Dow, right? So now you know that market's heading higher. You can go back, take the Dow components, and it doesn't mean you have to trade them on a monthly. Go back to a daily chart if you like on those Dow components and start looking for triggers to the long side, right? Triggers in the same direction as the index, right? And you can do that the same with a particular sector. Take an ETF for a sector, right? When it calls it a long or a short on the higher time frame, go back to the shorter time frame, look at the components of that sector, and start picking off those trades. Okay, it works very well. So let's look at a few more. Are there any Forex traders here? Let's look at a few Forex charts, and then we'll look at some commodities as well. And then I'll show you a few other things that this indicator can do for you. Let's look at the Euro USD. Okay. Again, this is the daily time frame, and you can see again it captures some real nice setups. Many of these with sideways moving average we don't want. We're only interested in these types of trades. Now this one you can say, hey, it was pretty much flat at the time. Why would you take this one? Well, very specific reason, like the one I showed you before, right? You have a break of a low of the range. So that's a no-brainer, okay? And again, we'll cover that. With the indicator, you get a recording of a class that we did where I explain all of these in detail, okay? But if you trade the currencies on a shorter time frame, like a 5-minute, right? There you go. It captures some pretty nice moves. Now, it doesn't look like the euro has a lot of volume here on the 5-minute. Let's look at a different pair. How about the JPY, Japanese yen, and the dollar? This is the daily chart. Again, some real nice moves, right? Across the board. Let's try an hourly. I'm just guessing here. There you go. Some nice moves. So whatever you want. Look at commodities. How many of you remember when crude oil was trading over $100, right? Let's go back to crude. And then it just collapsed and it went to like 40 and then 26, right? Let's go to the weekly chart so we can see that. There, right up in here, okay? Right up in here. Remember it was trading over 100 and then it just collapsed, right? And then there's another move. Then we came down to 26 and now we've been recovering. And you can see just how nicely it captures those moves, okay? So again, you don't have to trade it on a weekly, but you could use this to determine your trend and then switch to the daily or the hourly or the 5-minute and look for trade setups in that direction with slope, and you will do very well on here. Let's look for gold. Gold, I like to use this on to look at the longer term direction of gold using the monthly chart here. See, it captured that big bull run, and now recently, you know, a lower move, and now we've just been in a range, right? You can box these. We've been in a range on gold here for a while. We're just waiting for a breakout. But you can see we've had a few setups, but nothing triggered, right? And so we're still waiting to pop out either above that 1400 mark or below the 1150 mark. That key here, that the 1150, I think is key. If we break 1150, I think we're going for a ride lower, but it's just a matter of waiting. But you know, we could continue to trade it on a lower time frame, right? We don't have to stick to that. Let's see if there's anything on a 5-minute. There it is. So you still capture some pretty nice trades. Okay. Now, let's have a look at other parts of this indicator, because what the other parts that Jeff and his team put together here, I think really complement the signals and really help individuals as traders manage their trades. What I'm talking about is if you go to the top left of your chart here and click on view, there's an item called expert commentary. So if I click on that, it brings up a box. Now, there's some text in here that we'll talk about myself and trading wins and a bit about what we do, etc. But you'll notice that in between paragraphs, there's this blank space. So when there is no trade on, then this will be left blank, okay? But if there is a trade on, and you'll see this little black triangle here, which always defaults to the very far right of your chart, the most recent bar. You can move this around by either clicking above a bar, okay, or by using the little arrows up in the top of the commentary window. And you can attach this window to your menu of your chart on any side of the chart that you wish. But you'll notice that when it's in a trade, it will fill in the text. So let's go back to the setup bar here, and it'll tell you that Voracity is currently showing a short setup. But it'll also go on and tell you that to confirm that it's a valid shorting opportunity, you must wait for a trade below the setup bar's low. So it'll tell you exactly what criteria you need for it to become a trigger, so that if you're looking at this tonight, but you're working tomorrow, but you don't want to miss this trade, maybe you can set up you can put in an order, a buy stop order with your broker, so that if it goes below that point that it's telling you, you can get in on that, okay? And then as we go through the trade, okay, if we go to the next bar, it'll confirm, yep, it's now signaling a short opportunity. So it's told us to get in short. And then as we go through, it'll give you a stop level, right? So it's showing that if it rises above 1205, we should exit, right? Or we could look at the CCI. If the CCI closes above 0, that's also a reason to enter. So it'll tell you exactly what to look for. And as we go bar by bar, okay, this will update. So you can see that now it's put a stop at 1205.30. It's changed, right? So 1205.70, etc. Like so it'll update and it'll follow it along. It'll trail it for you, so you can update those numbers every night. If you have a stop order in, you can go in and then change it from 1205 to 1204.10 or whatever it is, right? And follow it along. And so not only does the coloring of the bars help you stay disciplined and stay in the trade, but the expert commentary is like having someone holding your hand and telling you exactly what to do along the way. So, you know, you don't have to try to figure this out on your own. It's all right there for you. Okay, it's very powerful. And if you're dealing with a stock, because this is gold futures here, but if it was a stock, it'll also give you a description of what type of option you can look at buying. and what type of expiration you want to look at, delta, etc. So, and if you're not an options trader, I encourage you to really learn about options, because with Voracity, it's very safe, right? It maximizes that safety component and gets you out as soon as it's going against you without capping your gains. But if you trade it with options, not only can you make it safer with options and risk even less, but you can also leverage it and make even more with options. So trading Voracity with options is incredible. I love it. Now, the other piece to this is that if you go to the power console, the top left, this little P here, and open it up and go to the Explore tab, there's a scanner for this. So you can very quickly use this to help you identify trading opportunities. So the top left box here is where you want to scroll down and go down to the Vora indicators, see the Vora Voracity setups and Voracity signals. Now the setups are the little diamonds, right? We're looking for trades that are setting up. The signals are the ones that already have an arrow, the ones that have already triggered. You can search for either one. I'm going to leave it for the setups here. And then the box below, you want to search your market, okay? So I like to look at the Dow 30, the NASDAQ 100, the S&P 500, etc. Let's just, and Forex major pairs there. I'm just going to look at the Dow and the NASDAQ for now. Leave that. Go to the far right, select my time frame. So you can see you can select for any time frame. So even if you're trading on a 1 minute or a 5 minute, you can use the scanner to quickly help you identify trading opportunities. I'll leave the daily and I'll click Start Exploration. And when I do, it brings up this box, and you'll see in a moment how it's going to start going through the process. There it is. And it's telling you how many instruments it's looking at, how many are rejected, and any trading opportunities it finds, it's going to populate down in here. It'll show you the symbol and a few other numbers. So let's see if we come across anything. And there they are. So we've come across these. Now you can always sort them by long or short, by price, by the slope. The slope here is the slope in the 20 period moving average. So if you're looking for the ones with the highest degree of slope, you want the highest number. So you can just click on here and sort. So this one here, yeah, it's negative, which means we're looking at a short, right? But it's a negative 13, which is a very strong degree of slope, okay? And here, you know, you can sort them, you can print this list out, you can copy and paste it into a watch list, or you can just highlight one, click open chart and have a look at the chart, right? So it's all right here, and you can see how quick it is. We went through 151 instruments, and it gave us a number of trade setups, okay? So it's very, very easy to use, very quick, very handy, no matter what time frame you're using, okay? Let me see, I think I had a couple other questions. Can we have a look at USD ZAR? Let's see if we can bring up USD ZAR. I'm not sure if we can. I mean, no, I'm not sure. It's not a pair that I usually trade. Doesn't look like. Can't apologize for that. Let's see if there's another one we can use. Let's look at USD CAD. How about that? Or put up any other one you want to look at, by all means. This is the daily chart. There it is. Weekly. So again, it doesn't matter what it is or what time frame. It will do a very good job of catching the bigger moves. Greg is asking for AutoZone, I believe, AZO. Let's have a look at AZO quickly. There it is. Let's zoom out here a little. Okay. Again, you want to focus on the ones with slope. Let's look at weekly. Okay, there you go. Catches most of those big moves. Monthly. And there you go. So, you know, again, you can use this a couple of different ways, right? You have coming out of a long-winded consolidation, right? An easy thing to do is when you have a consolidation zone, box it, right? Mark the high of it, the low of it, and you can see that back in here, once we broke out of that box, that's when we started getting those signals, right? Now, when you get a higher degree of slope, those are higher percentage plays. But the ones that are breaking previous highs, especially when they break out of a channel, are very, very effective. Now, again, you can just say, hey, it looks like AutoZone is bullish right now, longer term. So I'm going to go down to a daily and I'm going to start looking for long setups. Or you can just buy some stock, especially if it pays a dividend. You can marry a put with it, even if you wanted to protect yourself even further, and just let it sit and appreciate. It's very, very effective. Okay. So again, it works extremely well. Let me show you before we run out of time here a couple of packages that we've put together for you. If you go to tradingwins.com/now, tradingwins.com/now, we've put together a couple of packages for you. The first one on the left is the platinum package, which is geared mostly towards those of you who like to trade end of day. Okay. Trade the daily or higher time frame. So what you get with this package is the full indicator that you just saw, you know, with the diamonds, the arrows, the exits, the expert commentary, the scanner, the whole system, along with a lifetime license of Metastock DC software, the delayed charts, the the end of day version. Our staff will get on the phone with you and help you all set it up. Not a problem. You'll get 2 months of data included at no charge, and you'll get 2 pro training sessions. These are the recordings that I talked about where I explain to you in detail exactly which setup you want to take and which one you don't. Okay. And we'll also throw in a 30-day pro membership to our Trading Wins service, which includes nightly videos from me 5 times a week where I explain what happened in the market that day, where I think things are going. I also share some trade ideas on those videos. More importantly, we get together twice a week with our members. Every Monday evening and every Thursday morning, you'll be able to come into our live room and ask me any trading related question you like. We go through numerous charts looking for trade opportunities. Many different topics come up with technical analysis that we cover. And also for our pro members, every month we do a course of the month at no extra charge. All of that is included in the membership, but more importantly, it's there. So you're not just taking this and going off on your own. You have a chance to get some support if you need it from us. Now on the right is the day trader package, meaning you get everything you see on the left here in the platinum, but you also get a lifetime license to Metastock real time. So if you wanted to trade those 1 minute, 3 minute, 5 minute charts, it's all there for you. Real time data. You get also an extra recording, which is simply focused on day trading. Okay. And more specifically to day trading with options. I'll give you my option plan for intraday trading on this. And we're throwing in 3 months of real-time data and 60 days of our Pro Trading Wins membership. These are the packages here. Just click on Get It Now and you'll be all set. We'll send you everything out. So again, it's tradingwins.com/now. Let me just quickly see if there's any other questions. Yeah. As a recording will be sent out, and a couple of you are asking about recordings for this session. We will send that out to you later. Asking for the EU. We looked at it. We can go back and look at it again if you like. For the EU. Ketha is asking for NFP. We can go back and look at that as well. Let me flip back to my chart and let's look at NFP, I believe it was. No, let's see. FP. I'm not sure. Is that, can you confirm the symbol on that? I'm not sure I have the right one here for you. I'll be happy to look at it for you if you like. And Glenn, yes, it is. It's a same sort of. It's the same system. It's just on a different platform. So it's the same thing. That's right. uh, any stock you guys want to look at from today? Any particular holdings you have that you want to look at? Oh, Avery was asking for Microsoft. Absolutely. My apologies. I missed that earlier. Let's look at Microsoft. Let me zoom out here. Microsoft has been one of the better trending stocks, one of the better performers here. That's the daily. Avery, let me know if there's a particular time frame. I'll go through a few. There's the weekly. Caught the last couple of nice ones there. And the monthly. Yep. It's been in a nice long setup since mid 2016. It hasn't looked back. It's been really trending nicely, real nicely. Greg is asking for AVGO. Let's have a look at that. Broadcom. Broadcom was one I traded back in the day. .com bubble. It's been a little choppier since. Let's look at the weekly. Yep, it's been some nice runs on the weekly and monthly. Yeah, no. So this one did not catch on the monthly here. It looks like there's a setup now, though, coming together on the monthly. And Square. Jared is asking for Square. Let's look at Square. Square's been doing nicely. There's the daily. Weekly, yeah, there's that run recently. And monthly, it's a newer issue. I don't think we're going to see much in the way on the monthly. No, there's not enough data. The indicator does need a certain amount of data for all the indicators involved. So from time to time, you'll run into that where it won't populate because of that on the monthly. You need a number of months for it to come together. Okay, we'll take one more. Greg is asking for CMG, Chipotle. That's been one that's bounced around over the last few years. It's currently showing a short on the daily here. Let's see on the weekly. Yeah, there's that drop. Let's go back a little so you can see a bit more of it. There's some nice runs there going back on CMG. Again, if you focus on the ones with slope, it's very difficult to go wrong with this, honestly. And you know, it may be hard to believe, but I can tell you this is over many, many years. I mean, I've been using this for 20 years now, and it's incredible how consistent. If you look at monthly here, you know, these aren't small runs, right? They may look like a few bars, but you know, from here it was in around that 350 area, you know, up to here, even you know, going at the low of this bar, we're talking about over 500, right? So these aren't small moves. Let's go back here. So currently there is no trade setup right now. But again, you notice that when it gets you in and it drops, as soon as it notices it's going against you, it'll get you out. There's some that come against you a little more if it happens very rapidly, but for the most part, you're in and out very quickly, and you know, and capture most of those profits. Glenn is asking, when do I use weekly over monthly? Well, Glenn, I look at the time frames more for more depending on how much time I have to be in front of the market. So in other words, if you're working full time, you're raising a family, for example, you really can't afford to spend time on your charts every day, then look at the weekly or the monthly, right? You can look at every weekend, an hour or so, find some trades, set them up, and move on from there, or monthly. If you have time to look at this every day, I would encourage you to trade on the daily time frame. And if you have time during the day, even if it's not the full day, even say you have 2 hours on an afternoon, you can log in with a 5-minute chart or a 3-minute or 1 minute. Use the scanner, find some trades, and you're in and out in no time. So it really depends on how much time you have to devote to your trading. That should dictate your time frame. The only other thing I would say is use the higher time frames for the overall direction. So a number of traders I know use multiple time frames. In other words, we want to make sure that if let's say it's a short entry on the daily, we want to make sure that the weekly is trending lower, and same with the monthly. We want to make sure that all time frames are in order. Just like if I was going to trade with the hourly time frame, I want to make sure that the 4-hour and the daily were in the same direction of the trade I'm planning to take. It just improves your odds. What you're going to find out is, there's so many setups that you can't take them all, and you don't want to take them all. You just want to focus on the ones with the highest percentage play and go from there. And again, these packages we've put together, these recordings that come with it, I explain in detail why you want to take some and why you want to avoid others. Okay, so again, it's tradingwins.com/now. That'll take you to the package page here, and just click on Get It Now, and you'll be all set up. Okay, if there's any questions once we leave here, you can reach me at info@tradingwins.com, or you can just give Metastock a call. They have a great support team, a great sales team. If you have any questions at all, they'll be happy to help you out and get you all set up. Okay. Again, thank you very much. It's great being here with you today, and I hope you enjoyed. I hope you have a lot of success with this. Thanks again. Take care, everyone.